Sage reporting for Kalkine Media. Thank you for joining us, and please stay watching for this trending news topic to follow. How will Australian medical marijuana stocks fare in Europe? North America and Canada are the largest medical marijuana markets, with so many states in the USA following along with the Trudeau government to decriminalize the use of medical marijuana, and for some states even recreational use of the narcotic. However, a few Australian companies are choosing Europe as their target for growth and distribution, although it holds many risks due to the diverse markets stretching across the region. Namely, Sweden and Belgium's strictly conservative approach to the drug, whereas England, Germany, Amsterdam and Portugal's more progressive attitude to further research into its medicinal properties. It is important to note that most Australian companies choose to remain capital light and hold investments in intangible assets whose value is accounted for in terms that may not relate strictly to return on equity or return on assets. Meaning investigation into its distillate capital ratio against distilled cash yield metric could offer insights into the potential of value for its intangible assets, such as goodwill or research and development. The European Union, in its highest court, as well as the Australian Therapeutic Goods Association and the United Nations Drug Agency, has ruled that cannabidiol, being the main ingredient in medical marijuana products, is not a narcotic. And this will be crucial for further development of products in coming years. Analysts predict sales in Europe of cannabis-associated medical products will surge by 52% to $3.1 billion by 2025. The sector, being a developing one, can be volatile, and recent plunges in its stocks might have been correlated to the February 2021 Reddit meme stocks rally. However, many believe these stocks to be a long-term growth investment. What is important to note with medical marijuana stocks is what part of the process they are responsible for, whether they invest in research and development on their own patents, or are they using their capital expense to invest in acquiring patents. The balance sheets of two very similar companies in the same industry can be very different based on that deciding factor. Although most are capital light in nature, Can Group gained a license to cultivate medical marijuana in 2017, the first in Australia, and is valued at $150 million. And MGC as well do show operating costs involving the acquisition of new sites. BOD Australia, a smaller New South Wales-based firm, valued at $37 million, has lowered its operational costs and recently locked in distribution deals with UK, Italy and Netherlands. The year-over-year profit escalated by 114% due to 62% of their prescriptions for the product being repeated. Major players, Canopy Growth and Aurora Cannabis, perhaps due to Brexit changes, have had to scale back operations in Europe whilst tackling issues relating to cross-border supply chains, laboratory practice and manufacturing standards. Deep fundamental analysis is required when making investment decisions into cannabis stocks, involving market and economic conditions, including investment bubbles and regional-specific legislation. Thanks for watching Sage reporting for Kalkine Media.